start it off with saying good morning, everyone. Thanks for joining us today. My name is Jeff Huang from eXp Realty, your 2022 Education Committee Vice Chair. A few quick housekeeping items before we get started. All participants will be muted in the meeting. Should you have any questions, please enter them into the chat box. The speaker will answer your question during the Q&A toward the end. This session is being recorded and will be available on our YouTube channel, West San Gabriel Valley Realtors. My co-host today is Mario, who will introduce our topic and guest speaker. Mario, the floor is yours.
Well, good morning, everyone, and welcome to this very important and very informative meeting. So I would like to introduce Mr. Mike Ornelas. He's a EA, tax resolution specialist. As you can see, he specializes in helping taxpayers and business owners get the IRS off their back. We're going to need that here and there. He does this by taking an in-depth look at your financial situation. He enjoys trips to the beach. Oh, that's great. I love that myself. Deep dish pizza and watching a movie at the theaters with a bag of greasy, buttery popcorn. He loves his wife and two kids, Luke 7 and Leia 3, and they love him too. So Mike, welcome, and the microphone is yours.
Perfect. Well, good morning, everybody. And thanks you, Jeff and Mario, for that opening and that introduction. So as far as this morning is concerned, what we're going to be talking about specifically regards your clients and even some of your relatives as of today. So we're going to hop right in. And as far as my slideshow is concerned, have I been made the co-presenter so I can show my presentation?
Yes, go ahead.
Okay, so let me share my screen real quick. There it is. And share with you guys. There we go, perfect. So let's get in here today and get the ball rolling. So, by the way, whoever designed that that cover slide did a very good job. It looks better than my slides. So thanks for making me look good. Appreciate that. So this morning you're going to discover three main things. Number one, how to beat the bully. We refer to the IRS as the bully. The 5 ways to resolve your client's IRS problems and how to get your clients help. So why should you listen to me? Well, they did a great introduction, so I'm going to just tell you that I am a best-selling author. You'll see the book on the next slide. I host my own podcast, The Mike Ornelas Show, and I'm a tax resolution specialist. So there's that book, just in case you're not sure. Oh, was this really a bestseller? Yeah, right there. Small Business Taxes on Amazon. I had a client not too long ago, and this was their situation. They came and they owed the IRS $313,813, Terry and Janice. And the reason why is because Janice had a gambling addiction. And so she brought in her winning statements. And so I said, what's the story? Because there's always an origin story. There's always a jump off point of sorts. So I asked them, what's the story? So they told me the story. Well, Janice has a lot of friends. You know, she likes to interact with a lot of people, meets a lot of people on a regular basis, was in sales at the time. And so she lent out her casino card to her friends to use. That triggered the large winnings. It was something in the neighborhood of $800,000. I've never seen anyone win that much for 1 year. And as a result of that, it triggered the bulk of the tax liability. So when they came in, the 3 different divisions of the IRS were coming after them for that whopping tax bill. And they had filed tax liens against them. They were threatening to garnish their wages and levy their bank accounts and just make their lives very, very miserable. And so when we dug down into their situation, we found out that they should not be owing this tax liability because they one, they had a reasonable argument of sorts that it was not technically their winnings, it was just under Genesis Social. After we dug in and we found opportunities to get that liability reduced and even reversed, the IRS ended up sending them a refund of $18,200. So that is one example, which we're going to talk about a little bit more today. So that's the thing that we do on a daily basis. Point number one, look the bully squarely in the eye. You can end IRS intimidation once and for all. So according to the IRS Statement of Information Data Book, there are 19 million taxpayers who owe the IRS, and this has stayed true even for the most recent data book that was recently released. $391 billion that those folks owe in total to the IRS. The IRS spends 40% of their $11.2 billion budget on enforcement. So what's enforcement? Audits, collections, garnishing wages, levying bank accounts, sending collection letters, and the like. That's what the bulk of their budget is spent on. The IRS sent out, as of tax year 2017, over 100 million automated notices. And the thing is the majority of those notices were incorrect. A lot of them say that taxpayers owe a balance that they don't owe, or they say that the taxpayers owe quite a bit more than they actually owe. We've seen numerous situations where the IRS notice was incorrect. The IRS is the most brutal collection agency on the planet. They have unlimited power under federal law to make people's lives very, very miserable, especially when ignored. You have clients, friends, and family who are living in fear right now, who are being intimidated by the IRS right now, and who need help right now. A lot of people I talk to, which is on a daily basis, are scared. They just don't know where to start. They don't know what to do. They don't know if there's opportunity to help them out of the situation, or if they just should hang it up and not even get started to begin with. You can be your client's hero. You can strengthen your bond with them, and because of it, increase your own referrals. You are your client's trusted advisor, and this can only help you strengthen your relationship with them and thereby help you gain more business in the future because you were that trusted advisor for your client. Number two, there are 5 ways to solve your client's IRS problems. Just so you know, today we're not going to talk about tax liens. That is something that I can cover, but not in today's presentation. I have an actual other presentation where I delve deep into federal and state tax liens. So just so you're aware, in case you had that on your minds, because it does come up when I present for realtor associations. So 5 main solutions to your client's tax problems. Number 1, unfiled returns, as in file those returns. Number 2, offers in compromise. Number 3, installment agreements. Number 4, partial pay installment agreements. And number 5, penalty abatement / removal. The IRS is fond of acronyms. So whenever you see us use a description of some kind, usually there's going to be an acronym attached to it. So if I refer to an OIC and I start using jargon, then please do just correct me, because I want to make sure that you understand where we're going with that. So unfiled returns. To obtain any resolution, this is typically the first step. Your clients have to make sure that they are filing all their returns. And if they haven't filed tax returns in more than 6 years, the good news is the IRS and the Franchise Tax Board, state of California, they do conform to this requirement to only require your clients to file their most recent 6 years of tax returns. So that would be starting with 2021 and prior to that, the last 6 years. If they want to, they can file longer than that, but they don't always have to. It's required that they file not just their income tax returns, but they file their payroll tax returns if they have employees. It is the first step in many times resolving clients' tax situations. Here's a case study about that topic. The taxpayers' records were a mess, and I will tell you that most of the people that we talk to, their records are a mess. They have receipts and statements and documents in shoeboxes or in grocery bags or in trash bags, and they just have things all over the place. They are not the most organized people. This taxpayer had 4 years of unfiled income tax returns: 2010, 2014, 2015, and 2016. The IRS prepared substitute returns. As a quick side note, a substitute return is the IRS filing a tax return with all income, no deductions, no credits, no withholding allowed to the taxpayer, just all income, and the taxpayer is taxed just at the total income that was reported to the IRS. If it's for self-employment, for 1099s that were reported to the IRS, then the client gets taxed at 100% of whatever that 1099, the total of those 1099s, along with any W-2s reported to the IRS was. So back to its substitute returns, and assessed the taxpayer over $62,000, including penalties and interest, and was threatening enforced collection. In this situation, they were threatening to garnish the taxpayer's wages. So that's when they take money out of the taxpayer's wages automatically. We were able to protect the client and reduce this $62,000 to $3,800 by filing complete and accurate returns, saving the taxpayer over $58,000. So number two, second option for resolving your client's tax problems. And a caveat here, because the offer and compromise is the most heavily advertised resolution option out there. You will hear things or see posts or videos talking about this brand new program that has recently been introduced that you need to call now, otherwise it's going to go away and you won't be able to participate in it. Number one, it is not a brand new program. It's been around for nearly 40 years now. Number two, it is not going away. And number three, no, you do not need to call immediately. Otherwise, you will not be able to participate in it. So this is the option, which is why it's the most heavily advertised, that allows your client to settle the debt with the IRS for less than the full amount owed. It's also the most attractive option. A lot of people lead with this and say, are you going to file an offer in compromise for me? And we say, we don't know. We have to run our due diligence. We have to make sure that you actually qualify for this option, because if you don't, then we're not going to pursue this course of action. If it's not in your best interest, then we're not going to do it, because then you're not going to be a happy camper. In many cases, the client can settle for a lot less. So this is definitely a legitimate option. If your client can't pay the full tax liability, or if paying the tax liability because they have to tap into equity and assets, or they have to drain a retirement plan, or because the monthly payment that the IRS requires of them would be undoable for them, it creates a financial hardship, then this definitely is a legitimate option. These are the four factors that the IRS considers. They consider the client's ability to pay. They consider the client's income. They consider the client's expenses, and they also consider asset equity. So for example, if your client has too much equity in a home, let's say, for example, that client owes $50,000 to the IRS and has $200,000 of equity in the home, 99.9% of the time, that client is disqualified from the offer and compromise program. If the client has too much income remaining at the end of the month after factoring in all of the client's monthly expenses, the client will not qualify. If the client has too little in the form of expenses, because there's no car loan, there isn't any payment going out for personal loans, student loans, credit cards, maybe the client paid off the mortgage, then definitely that individual is not going to qualify for the offer and compromise program. The IRS will generally approve an OIC when the amount offered represents the most the IRS can expect to collect within a reasonable period of time. So when it looks like if within this time frame, usually it is within 5 months. That's typically the way that we approach it. Within 5 months of an approved offer, the IRS can collect that chunk of money, however much we offer them, then they typically will honor an offer and compromise. Here's an important note though. Our approval and acceptance rates are much higher than the national average. I touched on this point a moment ago. Last year, the IRS only approved about 40% of all offers and compromise submitted. Our experience has shown that only 30% of our clients qualify for the offer and compromise. It is running at about 30% qualify for the offer, and the rest qualify for one of the other options that are out there for resolving their tax issue. Our OIC, our offer and compromise acceptance rate, is 90%. The reason being is because we run strict due diligence up front. We dot our I's, we cross our T's, we run the numbers backwards, forwards, upside down, and all around to make sure that the client is actually going to qualify, not just up front, but also after the IRS makes their determination. Their determination process is averaging in the range of 6 to 9 months, with 6 months being definitely on the short end, 9 months being typically on the long end, but we're seeing even in some cases where the IRS is taking 10 months to 12 months. Not typically, but the average is 6 to 9 months. Here are the reasons for such a high success rate in that scenario. We won't submit an offer and compromise if we don't think it's going to be successful in the first place. Unfortunately, in my industry, the tax resolution industry, there are firms that will submit an offer and compromise for a client, even though they know full well up front that the client does not qualify for one reason or the next for this program. They will submit it. The 6 to 9 months later, the IRS sends the client a rejection notice. We did not approve it for X, Y, and Z reasons. The firm appeals the IRS's decision, which typically takes 30 to 90 days to hear back from the appeals division. And still the appeals division says, we're going to deny your appeal petition, which means that like about a year later, the client has lost a year of his life with nothing to show for it. That's no good. And that's one of the reasons why we see such high acceptance rates on the first go. Our extensive experience representing clients before the IRS is reason number 2, and pre-submission planning strategies, which is my personal favorite part of it, because a lot of people do come to us and they say, I don't think I'm going to qualify for this, but after we have helped them reverse engineer the outcome, we're able to confidently prepare and submit an offer on their behalf because we have done the due diligence and we've done the planning and the strategizing upfront, so that way the client can have a very nice outcome. Perfectly legal, perfectly ethical. It falls under the umbrella of tax planning. Here's an offer case study. We had a self-employed contractor client owed the IRS over $112,000 due to economic industry fluctuations, and he was unable to stay current on his estimated tax payments. It's a big thing to make sure that you make your estimated tax payments on time. The IRS also levied his bank account. So a levy is when the IRS actually takes money out of the bank account. And they also levied his 1099 income. So the IRS can take accounts receivable. They can notify whichever clients owe your clients money, that they should, instead of sending the money to your client, send it to the IRS. They have that kind of power. The taxpayer, because he had minimal equity in assets, and after we helped him do some tax planning, some financial planning, he was positioned as a good offer and compromise candidate. So we obtained levy releases on all his income sources, because the IRS can levy every single income source. That includes wages, self-employed income, Social Security benefits, retirement plans, and so forth. We prepared, submitted, and negotiated the offer, and were able to settle the case in full for $11,000, saving the client over $100,000 and having the federal tax liens released. And as a bonus, he got his life back, because once the IRS, the good news is, under the Offer and Compromise program, once the IRS forgives any amount of money under that program, it is as though the client never owed it to begin with. The forgiven income is not issued a 1099-C as a cancellation of debt, requiring the client to have to report it on his tax return as taxable income. Creditors are not notified. The credit reporting agencies are not notified. The IRS just wipes it off of that taxpayer's account at the IRS. Installment agreements. Number 3, a properly structured payment plan. So we're going to cover this because some people say, oh, I've got a payment plan. And I ask them, did you receive a confirmation letter from the IRS attesting to what you're telling me? Did the IRS say you agreed to pay us, let's say, for example, $100 a month starting on March 28th, and it is going to be for this length of time, 72 months, 60 months, however long? A lot of times they say, no, I did not receive that. Did you talk to an IRS agent and arrange that installment agreement accordingly? No, I did not. I'm just paying out of my own volition every single month via the IRS's payment portal online. Say, great. That's wonderful. That's noble of you. And you're showing me that you are a nice, kind-hearted, responsible person. However, unfortunately, you do not have an official installment agreement in place because the IRS did not send you a confirmation letter, which means that they can still garnish wages, levy bank accounts, and so forth, which is I jumped a little bit ahead, but point number 2, I can basically skip because I already went into it. So here's a 2-part warning. A lot of taxpayers, they enter into unending payment plans because the IRS piles penalties and interest on top of interest and penalties, which means that the balance just snowballs every month while the taxpayer is making payments. So in that scenario, it may be a good time to revisit the subject because the client may now be a candidate for an offer or may be a candidate for another resolution option besides just making payments every month that have now become unaffordable because maybe the client lost a job, had a reduction in hours or pay cut, maybe the business went under, any number of situations happened, including, say, divorce, and now the client is 50%, has had to distribute 50% under a divorce decree or what have you. It's a good idea to have an experienced tax resolution specialist negotiate with the IRS, not your client, because here's what you don't want to happen. You don't want the IRS to manage your client's monthly cash flow by telling them, this is the minimum payment that we will accept per month. This is all we'll accept, when they reasonably could accept less than that. And typically the client, because they don't know how to properly structure these kinds of repayment plans, they don't know about negotiating for the reduction of penalties. And in our case, a lot of situations, we're successful at negotiating penalties down by 50%. Here's an example of an installment agreement that we negotiated for a client. So the taxpayers owed $49,000 to the IRS due to non-payment for 2016-17. The IRS wanted $1,100 a month, which just couldn't do. The taxpayers couldn't afford it. the IRS was threatening to levy them, and the IRS had just filed a notice of federal tax lien against the taxpayers. When the taxpayers retained us, we were able to negotiate a $680 a month installment agreement for 72 months. And we were able to reduce the future failure to pay penalties by 50%. We also were able to stop all enforced collection and successfully had the federal tax liens released. So now the client could do things like refinance, could qualify for loans and other financing that they could not qualify for before. Number 4 in the resolution options that exist for your clients are partial payment installment agreements, PPIA for short. So this is an option that it's really closely related to an installment agreement. It is an installment agreement, but this is where the client only has to pay part of the taxes back over time, not the full amount that the client owes. These are the times when we use a partial pay installment agreement. Number 1, the client doesn't qualify for an offer in compromise. So we'll see if perhaps the partial pay installment agreement is right within our wheelhouse for helping that client resolve the tax liability, or doesn't have enough monthly disposable income to qualify for a regular installment agreement because perhaps the IRS wants $750 a month, and based on the client's financial situation, he can only afford $300 a month. And it also, in a lot of cases, this option might be more advantageous to your client than an offer, because the thing about an offer that a lot of people are not aware of is even after the IRS accepts an offer in compromise, the client is on tax probation for 5 years. So that means that the client cannot file a tax return late. The client cannot make an estimated tax payment late or not make the payment at all. And number 3, the client has to pay any balances owed in full for 5 future tax years. So a lot of times we see repeat offenders, and perhaps the client's financial situation changes, making it unaffordable for them to repay for the next 5 years. So partial pay installment agreement does not have those requirements like an offer in compromise does. Here's an example of a client who came to us owing $45,000, and the IRS said the minimum we'll accept is $800 a month. Client said, no way, I can't afford that. So we negotiated with the IRS and were successful at saying, hey, the most that our client can afford is $200 a month, and we'll arrange this over 43 months. Remember that the client owed $45,000. So thankfully we successfully helped him settle the case for only $8,600. So that's $200 times 43, save the client over $36,000 through this option. And the client was not in tax probation for the next 5 tax years. The 5th option that exists for your clients is penalty abatement removal. The IRS, this still boggles my mind that they have this many penalties, this many different ways that they can charge your clients extra on top of the original tax balance owed. The worst part, they can charge interest on top of the penalties, which adds to the original penalty. So they can charge interest and penalties on top of the original penalty. And so in a lot of cases, we've seen it where, let's say the original penalty was $1,000. We've seen that if too much time goes by, 2-3 years go by, because of the interest and the penalties that the IRS adds to the original penalty, we see that penalty snowball to become double, sometimes even triple what the original balance owed was on that penalty. So it is very egregious the way that the IRS does this. A lot of times we can reduce penalties to 0. Here are the 2 ways that we can do that. We can request first-time penalty abatement under the IRS's Fresh Start initiative. So if the client has not requested first-time penalty abatement in the last 3 years, and the client has been good about catching up on all tax returns, making the most recent estimated tax payment, if that's what's required, making the most recent income tax, payroll tax deposit, if that is what is required, then we're able to see that the IRS will remove that penalty, those penalties. Second is we can request relief from penalties due to reasonable cause. So let's see what some of those reasonable cause defenses are. Death. Let's say that the taxpayer was filing joint and the spouse died. Well, that qualifies. Serious illness, COVID is included, qualifies. Unavoidable absence, perhaps the client had to be deployed because of being in the military. Fire, flood, casualty, natural disaster, unable to obtain records, a mistake was made, typically by a tax preparer or by a friend or relative who was helping the taxpayer prepare tax returns or put together financial statements or whatnot. Erroneous advice or reliance on a tax professional, written or oral advice from the IRS. The IRS records all calls that are made to their customer service line. So you can reference who you talk to. I talked to Ms. Jones on 1/11/2022 at 10:35 a.m. and she advised me to do X, Y, and Z, but that advice was incorrect. Or ignorance of the tax laws. Hey, I just didn't know what I was doing and I did this just out of plain ignorance. Reasonable cause or ordinary business care and prudence, as in it just is the right thing to do. The other one is undue economic hardship. So this penalty is causing the client to not be able to repay the total tax due. And as a result of that, we are notifying you that it's causing undue economic hardship and thereby requesting that you relieve or forgive this penalty. Here's an important point. And this is one of the things that I really enjoy. All right. This is one of the things that I really delve into. I enjoy writing. I really, really enjoy it. And I know that by doing the best writing job possible, writing the best fact pattern and the best narrative possible, by making sure that it shines, then the client can get the best possible outcome, which is what we're always aiming for. Knowing how to write these penalty abatement requests, it's art and science. So it's not just citing tax code, but it's also making sure that whoever's desk it lands on, that person actually wants to read it. Because if you just cite, or the client just cites tax code, then it may or may not be accepted. But if it reads like a Stephen King novel with facts and figures and dates and individuals and what happened here and what led to this death or serious illness or what have you, then 9 times out of 10, the person at the IRS is going to be favorable, not just to read it, but also to grant the request. So because we've done a lot of these, we have a very, very high success rate. It is not as high as our offer acceptance rate, but it's hovering at 85% is typically from the first go. And if they reject it, then we can always write a petition to appeal their decision. We had a divorced taxpayer who was assessed over $77,000 in failure to file and failure to pay penalties for 2010 through 2017. This was because her ex-husband did not want to agree and did not want to cooperate with granting her access to any of his records. So we said, hey, this is reasonable cause. The estranged husband is not allowing his ex-wife to see the records, and she doesn't have records of those old tax years. So we wrote a request. The service center denied it, but we appealed it, and we won the case at appeals. And thankfully, we were able to save this lady $77,000. In preparing to wind down, here. And I know we've talked about a lot, so if you have any questions, feel free to share those in the chat and we'll cover all the questions that you have. We'll allow a good amount of time so that way we can cover all the questions that you folks have. So far we've covered and you've learned, one, how vicious the IRS can be, and number two, the 5 types of cases that you'll possibly see. One that I referenced in the beginning, but we didn't delve upon, is actually number 6, technically, which we don't have time to go into, but that's dealing with tax liens. So that's technically number 6, but we just don't have time because it would extend it. Tax liens are a specialty unto themselves, and they take a little bit of time to explain because there's different nuances. So here's how to get your clients the help they need now. Remember, we're talking about how to get the IRS off your clients' backs and look like a hero. This is what I've dedicated my life to. This is what I'm passionate about. This is why I wake up every day. This is what I talk about a lot of the time. This is what I do all the time. If you are looking for a good tax preparer, then I'm not your guy. I'll just be upfront with you. I actually don't like doing tax returns. I know how to do them and I know how to do them well. I just don't enjoy doing them. There's plenty of other people who are great, who enjoy doing tax returns. If you're looking for somebody to do bookkeeping for you or handle your payroll or handle filing your sales tax returns or other forms that you need to file or anything else like that, unfortunately, I'm not your guy because that's just not my lane. But as far as helping people with tax problems, that's my lane. That's what I do every single day, is help people get the IRS off your back. And if you would allow me to, I would very much love to work with you, to answer your questions, to help your friends, your family, or your clients with their tax issues as well. This is how you can get in touch with me. You can either call my office and my assistant will schedule an appointment. You can email me directly. That's mike@sacramentotaxresolution.com. At the day and time you specify, you'll call our office and I'll give your referral a free tax debt consultation. It's a 45-minute consultation that covers everything that they want to know, all their questions answered, all the clarity that they need. Just yesterday, I spent about an hour and a half actually with a divorced couple. I also talked to a realtor who is between commissions right now, who's a single mom. I also talked to a guy who works as a welder. This is what I do to help folks on a daily basis. So if you need my help, no hard sell. I told Fong, no sales pitch, just here's my contact information. Reach out to me and I'll be happy to help. So that's all that I have for presentation today. Thank you for your attention. Thank you for your participation. If you have questions, then please put them into the chat and we'll cover all of those in the time that we have remaining.
Hi, I do believe there's some question. Would it be possible just to copy and paste your contact information into the text box?
Oh, absolutely.
I think
and,
that, yeah.
And by the way, if anyone would like a copy of my slides, I'd be more than happy to share them with you. Just put your email into the chat box here and I'll shoot them over to you in about 10 minutes. And let me copy that real quick. So there's a phone number, so I'll put that first, and then that way it doesn't bleed in. And then there's that.
Perfect. Mario, do you want to help facilitate some of these questions? We do have a quick question that
Sure.
I could see. One coming from Philip Chang. Are you a CPA or what's your qualification and certs?
Yeah, sure. So I'm not a CPA. So if you are looking for someone to do a review, a compilation, or audit of clients' financials or yours, then I cannot do that. I cannot sign off on that. However, if you are looking for somebody who specializes in tax resolution representation, that's what I do. I'm an enrolled agent who's licensed by the IRS to represent taxpayers, and that is my licensure.
Okay. This one's for Cecilia. How large
Okay.
is your staff, your team?
Oh, we're small, so you get personalized service. We have a total of 5 people working in our office. So we're a small office. We don't take on hundreds of clients per year. We prefer it that way because then we can provide personalized service. We don't like it when someone gets lost in the mix or feels like we're ignoring them. That's never something that we want to happen. And so we've intentionally stayed small because of the fact that we want to provide that personalized service to folks. And so there's me and there's 4 others. So at any given time, right now, there's going to be a total of 5 of us working. And then beyond that, we do have, oh, absolutely, Philip, that is, we're in California, my friend. To not be insured is just to be not just suicide, but also business suicide. Absolutely. We're insured up to $2 million. So as far as that is concerned, that is the number of staff that we have today. Small team, and we like it that way.
Thanks, Mike. This next question is from George Shea. When is the amount too small to be worth the time and effort to fight and argue with IRS?
Yeah, that's a really good. And by the way, you folks are asking really intelligent questions. That doesn't always happen when I present at real estate offices or realtor associations. So thank you for asking informed questions. So that is bare minimum $10,000. So, and that is actually hovering nowadays closer to the $15,000 mark, only because of the fact that when someone owes that small of a balance, a lot of times the IRS is not willing to budge as far as an offer in compromise, for example. It's very, very difficult. I personally have not seen someone who owes $10,000 qualify for an offer in compromise, only because of the fact that typically the way that it works with client's financial situation is the IRS says, okay, well, you can just pay this off. You can just pay us off, over the next 6 or 7 years, and it's going to come out to be $200 a month, something very small. So it's hovering closer to 15,000. We're willing to conduct a consultation and look into a client's situation just to see if there's an opportunity to help them. And that way they know with you sending them over to us, then we're willing to have that conversation. And then they can know for sure if they need to go this direction or if they need to go that direction. They can know with certainty and at least have some clarity. I always say that it's just like Wayne Gretzky said, you miss 100% of the shots that you don't take. And so we're willing to conduct the consultation, but the bare minimum is $10,000 owed to the IRS. If they owe less than that, there's nothing that we can actually do to help them out that they couldn't do for themselves. They can just hop online at the IRS's website and arrange their own repayment. The IRS will grant what's called a guaranteed installment agreement for balances under $10,000.
Very good. Then our next question is from Yang. What's your fee structure like?
Usually in US dollars, so we don't accept pesos or Bitcoin or anything like that. As far as that's concerned, it's on a case-by-case basis. So it's very hard to say because we have, just so you folks are aware, we have our largest client who's $4.5 million tax liability. So his fee is well into the 6 figures because it's taken us 2 years to get to this point where we can talk to the IRS. So we have clients who are similar to his, who range way up there because of all the time, all the attention, all the manpower that is required to properly work and represent the client before the IRS. And then we have the smaller guys who are on the smaller end of the spectrum. But it's really on a case-by-case basis. And we speak we talk that over directly with the client. We tell them exactly how it's broken up. I will tell you this, that everything that we do on behalf of clients, it's always billed on a flat rate basis. We don't charge hourly. We don't do anything that is going to be egregious or adverse to folks. It's always, the client knows what to expect upfront. This is our pricing, and this is what you can expect on the back end. To tie into that, if we are confident, and I do all the consultations, so they'll always be talking to me. If we're not confident, if I don't have at least a 90% assurance that we can help this person resolve the tax liability to where it justifies what the client pays to us, then we don't even take on the client. I'll tell the client, look, this is where I am. This is where my thinking is going. It's my hunch tells me that you'd be better served going in this direction, and there's not going to be something that we could do to really serve you, to really help you and justify what you paid to us. That's always where we're coming from. We don't ever want it to be that the client pays us X amount and we didn't justify what the client pays us. Always are in the mindset, if we cannot, and it's not possible to justify what the client paid us, then we're not going to even take on the client. We're just going to say, hey, this is the direction you need to go. This is exactly how you need to approach it. And that's that. Just if you can leave us a review, that's it. There's no charge for anything. So it has to be with at least a 90% confidence level that we're going to actually help the client resolve the tax issue before we will even agree to work with the client.
Very good. Well, it looks like you've answered our 21 questions. Thanks for letting us hit you up with all those. I think you answered them amazingly. At this point, let's go ahead and wrap up. On behalf of West San Gabriel Valley Realtors, we would like to thank Mike, enrolled agent for tax resolution specialist, for being our guest speaker and for your informative presentation today. We have an amazing lineup of useful and interesting upcoming classes. We have a 2022 Real Estate Outlook presented by Oscar Way, who's the Deputy Chief Economist for CAR on February 23rd. We also have a 2022 Real Estate Legal Update presented by Paul Chang, scheduled for March 1st. We look forward to seeing you all there. Till then, thank you very much.